Hey folks, and welcome to the Did You Know Crypto podcast. Today's podcast is going to be a solo one for me, and basically I'm just going to be doing about 20 minutes of going over the mistakes that I've made since I've been in this space, whether it's about trading or understanding what Bitcoin is or anything like that. I think it's important to acknowledge where we've been wrong, why we were wrong, and how we kind of grew out of that experience and learned more about ourselves and how to basically just approach life, jobs, this space, whatever it may be, in a better, more educated way. So I really appreciate you guys listening to the episode. If you want to help out, best thing you can do, iTunes, 5-star review, written review, anything else, go to supportmypodcast.com. That's supportmypodcast.com. And we have all the stuff, whether it's going to be shopping through our Amazon link or supporting us like Patreon using Bitbacker, Bitcoin donations. Any way you can help, really appreciate it. Keeps the coffee in my pot, keeps the diapers on my children, and it keeps the microphone working. So anyways, I really do appreciate you guys. You are the reason that I do this, because if no one was listening and I had 0 downloads, I wouldn't be making any more of these. So I really do appreciate it, and enjoy the rest of the show. Hey folks, and welcome to today's show. This is going to be a solo one with just me. So actually, what I want to talk about was kind of an overview of where I have messed up in the past. Now, all of us who have been in this space for any given amount of time, and especially those who got in 2017, could probably point to quite a few instances where they made mistakes or where they were wrong about something. Anybody who doesn't probably isn't worth listening to. I mean, everyone has made a mistake or not understood an aspect of this space. And I just kind of wanted to go over what mine were. I have no idea how long this episode's actually going to go, but I'm actually dabbling. I'm hoping to keep this under about 15 minutes because I've been thinking about creating a mini cast or short cast. I don't know. That's kind of a dumb name to call it, but something along those lines. I'll probably just stick with that name anyways, and just make it kind of a little bit shorter instead of having full hour length interviews or full hour length episodes every single time, although I do like the long form. So I would say that for those of you who haven't listened to the show before or haven't heard the episodes where I've mentioned a little bit in my background, just to kind of give the TLDR on it, I first got into Bitcoin around 2013, or at least I first heard of it probably in 2012, maybe early 2013, or late 2012, early 2013. But it was in the spring of 2013 I started mining, or maybe it was even earlier than that. I can't remember. It was really early in 2013. I started mining Litecoin, and I found old wallets that if I'd actually kept hold of that Litecoin when I first started mining all the stuff that I had mined, I would probably have, I remember I did the calc. This was right around when I think Litecoin was like $150 or something like that. And I would have had like $8 to $12 million in Litecoin in the value, because that was mainly the crypto that I was mining, basically because I was using GPUs. Bitcoin had already moved over to ASICs by that point. So the GPU mining was pretty much, I do a little bit of Dogecoin, Ron Paul coin, whatever coin was most profitable that day, and then I dump it on Cryptsy, but it was mostly Litecoin. And anyways, why did I do that? Because I understood what Bitcoin was, or I had an idea of it. I'll kind of go into one of the other things I want to talk about was not really understanding what Bitcoin was. And I didn't trust my instincts, but most importantly, I didn't trust what I knew to be true. I was not as well read on the subject of economics and just overall what Bitcoin actually is at that time. But I did understand the concept of central bank policies were not conducive towards continuing a stable system to allowing people to maintain the value of their wealth that they've traded their time or services, whatever, for. I guess that is the same thing. And overall, it was just a incomplete system. It was a system that did not work. Or I should say, it does work. It works very well for very specific people. It works well for governments who want to borrow money to maintain short-term or achieve short-term goals, namely to get reelected or accomplish some sort of social position that you think is important, and to take that and take that price, take that tax, if you want to call it that, on your current money, right? So the same thing works with the credit card. I am not paying that price right now. I'm saying I'll pay that later with a fee on top of it. And so it's a good way to offload the cost of your products onto future generations. Or I shouldn't say what the government does as a product, the cost of your programs onto a future generation. And it's also a great way to pay off old money that's more valuable with new money that's less valuable. So the Fed itself has said that they target a 2% inflation rate per year. So if you're losing purchasing power of about 2% every single year, if they actually did what they wanted to, but let's just call it 2%. So you're losing that 2% value every single year, and that compounds in reverse. And so 30 years from now, that money that you're using, that you borrowed 30 years ago, that's now due for that bond today to be paid off, you're taking money that has less purchasing power and paying off a debt to somebody who borrowed it to you when at the time it had more purchasing power. It's actually a pretty good deal. This is why whenever you hear people going like, I remember when it used to cost $0.25 to get a gallon of gas. It's not because gasoline was cheaper then. It is because the money, our dollars had a higher purchasing or a better purchase value. And so I understood that. I understood that fiat currencies are inherently unstable over time. You can keep, like the US dollar has actually been pretty stable-ish if you look in the very short term. From 1965 onward, it's been relatively stable compared to some other countries. Like I'm looking over at my collection I've been making of inflated currencies. Like I have a 500 billion Yugoslavian dinar. I have a 100 million Venezuelan bolivar, a 100 trillion Zimbabwe dollar, and then 100 billion or 100 million mark note from 1923 in Germany. And just it shows that there are a lot of examples of hyperinflation that occurs in countries. And the US dollar compared to those has been relatively stable, but they become less stable over time, especially if spending increases, which with a central bank, with the ability to print money, with the ability to shovel off economic realities till a later period, say 2008, we went in there, we did not make those people, the banks, that were trading these derivatives, that were over-leveraging themselves, we did not make them pay the price. And yes, the average Joe on Main Street, as they like to say, would have borne the brunt of that. But all that happened by us going in, and by us I mean the U.S. government going in and bailing them out, all that happened was that they got to keep their companies, they got to keep their bonuses. A couple companies did go out of business, but overall, everybody else was fine, and they actually ended up in a better financial position. Overall, they got money, they were able to buy even more distressed assets that they saw that were valuable, and to come out better on the other end. They did not have to learn a lesson. And when you make, and when you send bad signals into the markets, people read those signals as truth. And when it's a falsehood, when it's a fake signal being sent out, or it's a obscured signal, it's not actually showing you what's actually the reality is, people in the market react to the falsehood as reality, and they make decisions that they then have to bear the burden when the truth is finally revealed. So it's a long way to say I understood how all this works, and I understood why Bitcoin was better. I understood that Bitcoin was a better, more sound money. I understood that it made it so that, a sound money is easily spendable compared to, say, gold. But I didn't trust my instincts. I didn't trust what I knew. And now we're approaching about 9 minutes. So this will not be one of these mini casts. But anyways, I didn't trust my instincts, and I didn't trust what I knew. And because of that, I paid probably what hopefully will be the most expensive financial mistake I've ever made. Now, I didn't lose that money. It's not like I'm $8 to $10 million in the hole. But by not trusting my instincts, I lost out. I lost out on an opportunity. I did not seize upon that opportunity. And I'm very happy for the people that did. I'm very happy for the people that recognized it, recognized it earlier or at the same time that I did, and seized upon it. I mean, just think of all the people that got in even in like 2015 and were just dollar cost averaging $100 a month for a couple years. And I'm sure that they did quite well, and I'm very happy for them. The other big mistake that I made was in 2017. Now, I kind of, after Mt. Gox and the Bitcoin dumped, and I can't remember at what point in 2014 that it must have been late summer, early fall, because that's when we made our move. We were in Idaho at the time, and that's when I was mining, actually, it was really nice because it was so insanely cheap, relatively speaking, not compared to China, but, most U.S. states. To mine there, the electricity was like sub 5 cents a kilowatt. And so when we were going to do the move, I just, there's a lot of stuff. It was a new job, and, packing. We just had our son not too long before that. And, 2 kids under the age of 3 trying to move across the country and all this stuff. I was just kind of like, I got too much going on. So I went on eBay. I sold all my mining equipment. I paid back my friend who had loaned me some money to buy the second rig. And I made like a little bit of money. I think by the end of it, by the time that, I paid for the losses on the machines and stuff like that, it was pretty much a wash at that point with the depressed prices. And it was a good learning experience, actually, because I learned how to put together like a basic computer system, just put in a motherboard, the CPU, and all that. I'd never done that before. And that was a good learning experience. I was very happy with that. But so I sold everything off, and I think I had, quarters of a Litecoin here, and, a tenth of a Bitcoin, or, across a couple of wallets and those types of things, and my wallet.dat files that I'd recently found about a year ago. I was like, oh, wow, I still got a little bit left over here. Hey folks, I hope that you're enjoying this episode as much as we are. I don't have any sponsors, so if you could go over to supportmypodcast.com, you'll see all the different ways that you can support the podcast, from Amazon links to a bunch of other stuff. You could back us on Bitback or with crypto, but most of all, if you can go to iTunes and leave a 5-star and a written review, it'd be very, very helpful. So thanks again, and enjoy the rest of the show. Anyways, I kind of dropped off the map. I was reading up on Bitcoin. I kept a Google News alert, so I was kind of aware of what was kind of going on. I wasn't participating. I was not in the space. I was not on Reddit. I wasn't on, anything really talking about it. I was still, proponent of it, but it was just like I got distracted by other things for a couple of years. And it was late 2016. I started to, I have to admit, it was the price. I started going, oh, wow, it's actually coming back up again. And I started going, man, you know what? I should have kept, that's when the first time I was like, I knew I should have kept it. It's like breaking 800 now, or 1,000 or whatever it was right at the end of the year. And so I was like, well, that's kind of interesting. Maybe I should buy a little bit more Bitcoin again and do that. And then I used this one of those things I kind of forgot about, and I started reading a little bit more. And then I got back in springish or whatever, and I started to fancy myself a trader like everybody else was, right? And I was doing well, kind of, But I started to realize, like I was making money on trades. I was doing well, but I was not able to actually I was making enough mistakes where I should not have been trading with real money. I did okay up until the end, and then I actually, I did lose quite a bit of money in the bear market. I was convinced it was popping back up a lot faster than it ever did, and that I was not convinced it was going to go down, which proves further that I didn't know what I was doing when I was reading those charts. And I do believe that technical analysis and all the kind of chart trading stuff does have merit. I don't think that it's voodoo, but I do think, like any other skill or art, if you want to be good, you have to put a lot of time in. If you want to be great, then you need to put in a lot of time. And I am not passionate about trading. I was starting to read books. I was starting to do courses and videos and all that. And I was starting to understand it, which is why I didn't completely lose my butt. But I also realized I'm not passionate about it. I don't care that much to do it. Like, I didn't find any love in doing it, and I felt like it was work. And I don't want to dedicate myself to another thing that I feel like is work. Like, I should preface that the idea that, if you find something you love, you never work a day in your life. It's like, yeah, that's also what you call somebody who lives on the beach and doesn't ever have any money. There's work in everything that you do, right? But you don't mind doing the work when you are passionate about it, right? You enjoy it. You enjoy the work. You will work every day of your life. The choice is whether or not you want to do it in something you're passionate about, and then the work feels like fun, or if you do it in something you're not passionate about, then the work does feel like work. But I'm not a trader, and I realized that I'm not willing to put in the time to be good at doing it. Another thing is that if you would have asked me in 2017, another thing I got wrong is I bought into the hype. I bought into the hype of blockchain and all these different products. It's going to solve everything from supply and logistics issues to, ending human trafficking and we could solve lots of, the refugee crises around the world and, voting and all this stuff. And I think that came from me not completely understanding what Bitcoin is. And that journey from I really started to read up, tried to figure out what Bitcoin is, or started to do more reading around the time of the fork, because I didn't really understand the total merits of each side. And I still have not. I lean heavily one way, but I have not ultimately decided on whether or not I think on-chain or second layer is the preferred method. And it's kind of a coward's way of going about it, but I'll own that. But I'm also not going to be pressured into making some sort of pronouncement that I am for small blocks, or I am for big blocks. I'm for Lightning, but no, I'm for on-chain. Just because people feel like you should or feel like you have to. I've made those mistakes in the past of not understanding something, taking a position on something, and later coming to regret taking that position on it. And I am in no position where my lack of decision is harming anyone. And I think that my lack of decision is better for the listeners that I do have, and that I'm being honest. I'm not going to jump out and say that I am 100% for the second layer small block thesis, so that I can garner support from people in that community. I'm also not going to jump out and say, well, no, actually I am for on-chain and start, doing all that so that I can gain support in that community. I am willing to listen to anybody's ideas, and I want to talk to everybody. And that's where I'm at. So me not knowing what Bitcoin was, I didn't realize that basically most, if not all, the other projects out there are just pure junk. I'm not going to name the some of these projects that I was really not passionate about, but had high hopes for. But there was some that I put a significant financial interest in, and I lost money on those. And once I started to really figure out, it wasn't until mid 2018 when I really was starting to understand the whole Bitcoin, not blockchain dynamic, that I was going to need to divest from there and invest totally in Bitcoin investments. And once I realized, like, okay, putting things on a blockchain aren't necessarily any better than the way that they're doing it now. Like, the reason that Bitcoin on a blockchain works is because of, one, the financial incentive to continue running the network. It costs a lot of money to buy mining equipment, to run mining equipment, to do all this kind of stuff. And you're not going to run that amount of, you're not going to spend that amount of money to make sure that you're accurately tracking bananas in a decentralized fashion. There's no historical worry that, well, if we do not have banana tracking on the blockchain, if we that there's this huge issue of, well, governments in the past have inflated the bananas that are en route, and then you get there and you're like, oh, I thought I was supposed to get a whole box of bananas, but it's actually just 2. Like, the reason that Bitcoin, it makes sense to do it, to spend that amount of money and that amount of energy output for the mining of Bitcoin, for the securing of the network, is because it is money, and you're providing a financial incentive as well for them to do it. And once I started to realize that, I was like, well, a lot of these things that I was like, oh, well, this would be cool. And, and you can just deploy blockchains for this company, and this company can come in and do that. I realized that pretty much all this stuff is junk. There's some interesting stuff out there. I just did my episode with Marco Peerboom about Decred. Decred is something that does pique my interest. BAT, Basic Attention Token, does as well. None of this is financial or trading advice or anything like that. I'm just saying where I'm at on some of these. Although I do agree with the maximalist perspective on that. Why couldn't BAT have been Bitcoin? But then again, the only way to make that work really would have to have been with Lightning. And Lightning's nowhere near for it, so is it just Brave just going to mark itself as a browser and say, well, eventually we're going to do it? I understand why they decided just to go with a token, but I understand that aspect of why they decided to do it, but I do agree with the Maxim's perspective of that BAT in the long run as a seemingly means of exchange. It is not, I don't think, going to ultimately be successful, and I think they're going to have to pivot at some point. But the concept fascinates me. I think it's very, very cool. But so in the end, I think this all really, I'll wrap it up here just so that it can be under 30 minutes. I think that what I continue to need to do is to educate myself deeper in this space and in related fields, whether it's cryptography or economics or game theory, so that I can truly understand Bitcoin better. And the more that I understand Bitcoin, the more that I fall in love with it, basically. The more that I love what it does, what it says, because every single Bitcoin transaction is in itself a form of, I guess, free expression. You are voting with every transaction on the Bitcoin network. And I continue to fall in love with the concept even more and what it represents for the future. So I hope that you guys just enjoyed this quick little download of all the different ways that I have screwed up since I got into this space. And I'm sure it won't be the last time. And in a way, I hope that it's not, because when I stop screwing up, that means I either stop caring enough to take risks, or I have somehow achieved some sort of nirvana status and I'm in the afterlife. So I hope that you guys enjoyed the podcast episode today. And if you could do me a quick favor, head over to iTunes and leave a 5-star review and a written review. That really, really helps. If you want to know the other ways, go to supportmypodcast.com. That's supportmypodcast.com. And I've got all the links there. Shop through our Amazon link. You can support us on Bitbacker by making Patreon-like monthly donations in Bitcoin or Bitcoin Cash. And you can do all that sort of stuff at supportmypodcast.com. So once again, I really appreciate you guys listening, and see you next week.